Everybody, welcome back to FedWatch. Today is a special episode. Oh, did I say FedWatch? That is my other podcast with Bitcoin Magazine. No, welcome to Bitcoin and Markets. My name is Ansel Lindner. Today is a special episode. We're going to be reacting to the drop of the FOMC policy that should be coming up here in just a few minutes. So I wanted to go over a few things beforehand. Let me share my screen. Real quick housekeeping. This is the website, bitcoinandmarkets.com. If you sign up to get the free email notifications, you'll get notified every time I drop content. So check out bitcoinandmarkets.com. I am live streaming on YouTube and Telegram and Twitter. So you can find me and follow me on all of those things. Okay, so what do we expect from the FOMC? I'm going to read through here a little bit from this morning on Telegram. We do have 2 minutes till the drop, so let's see how well I can do. So actually, I tweeted about this. Let me see if I can find this real quick. Sorry, guys. I obviously was not prepared for this. It came so quickly. All right, here it is. I'll share this tab. So today is FOMC day, but it's pretty split. The market this morning via the CME FedWatch tool was 89% for 25 basis points. I think it was about that still right now. Plus, the Fed wants to be late to a pause or a pivot because then they can go through and say, hey, we were too powerful. People don't lose confidence in the power of the Fed's policy tools and their policy transmission mechanism and all of that stuff. Plus, powerful men now have been with influence, like Warren Buffett and Ackman and some others are saying, hey, we need a pause. We need a pause badly right now. Look at this banking crisis. Powell's MO is also toward pausing. So in 2019, he paused in January. Then he had a couple mid-cycle adjustments, he called them, where he cut rates before the repo rumble when he really cut rates. And then, of course, the COVID hit. So Powell has the MO of pausing. And, of course, the banking crisis that has been going on. And that's having a lot of people saying, hey, we need to pause. So that's what was going on up to that point. All right, let's refresh this page. This is where we'll find this, the FOMC website. Still nothing. It is 2 p.m. from my clock. There we go. So let's go into this. The committee seeks to achieve maximum employment and inflation at a rate of 2% over the longer run. In support of these goals, the committee decided to raise the target range of the federal funds rate to 3.25% to 5%. The committee will closely monitor incoming information and assess the implications for monetary policy. So they did raise to 3.75 to 5%. Let's take a look at what is going on with the markets on this news. So stock market, S&P 500 is green. I'm going to go to the 5-minute here, and you can see that it is popping. It is absolutely popping here. Very interesting. Usually these reactions quickly reverse. So typically, I mean, it's not 100%, but typically the first initial reaction is a fake out and it goes the other way. But we'll see. Right now, so far, it is positive for stocks. Let's take a look at things like the 10-year. Big drop. People are, I guess, expecting this to be a horrible mistake by the Fed raising interest rates. But it is now selling off 3.5%. So the 10 years at 3.5%, and they just raised the top of their target range to 5%, guys. That is a 1.5% difference between the 10-year right now and the Fed funds target. Let's take a look at Bitcoin. This is the 5-minute chart again, and we see a wild reaction. So that is that. I'm going to read through this statement a little bit more now. This is kind of boilerplate language. Stand by 1 second. All right, school just got out and my kids just walked in the door. Okay, so let's bring this back up. So, recent indicators point to modest growth in spending and production. Job gains have picked up in recent months and are running at a robust pace. The unemployment rate has remained low. Inflation remains elevated. Again, what are they talking about inflation here? Because uh, obviously, inflation should be the money supply, it should be considered money printing. But even if you're talking about CPI, yeah, the last couple months have been slightly elevated, but the last 7, 8 months have not been. Okay. So, exactly what are they talking about? The peak CPI is definitely behind us. In June of 2022, CPI hit, I believe it was like 1.9%. You guys can double check me on that. 1.9% month over month in June of 2022. It's not getting back to that high. Okay. Because that is long in the past. We have hit peak CPI. And right now, with these banking crises, we are in threat. There is the threat of a deflationary shock. When banks fail, that's a deflationary shock. And bailouts are not inflationary because it's just filling a bigger hole. You're using, my example is, you're using 25 billion to fill $100 billion hole. On net, it's still deflationary, even if you count the bailout as money printing, which we can debate whether that is or not. Okay, continuing. The US banking system is sound and resilient. So they put that in there to, quell any fears in the market. Recent developments are likely to result in tighter credit conditions for households and businesses and to weigh on economic activity, hiring, and inflation. The extent of these effects is uncertain. Oh, interesting. They put this in here. This is new. The committee remains highly attentive to inflation risks. So they are acknowledging the banking system is having trouble, but they're still raising interest rates, their Fed funds target. They're not raising interest rates. They're raising their Fed funds target, which we saw the 10-year doesn't care. Actually, let's go back to this and let's take a look at the 2-year, because I think that's an even more important one. What's going on with my layout here? Oh, here we go. 2-year. I'm going to share this screen. And you can see the 2-year is also just crashing down to 4%. And again, the top of the Fed funds target is 5% now. And the 2-year is at 4%. Absolute devastation. This is absolute devastation in the market going on right now. Let's take a quick gander at the 10-year and then also going back to Bitcoin, seeing any sort of. So Bitcoin is trying to rally here. As I've been talking about recently, there is this band of resistance that we have gotten to very rapidly. If you guys can see the chart here, this band of resistance, and I'll share this. I haven't been sharing these to Telegram. Sorry, guys, but I've been talking about them, so hopefully it's all right. Bitcoin is in this red band of resistance still at around 30,000 or just under 30,000. That resistance comes from the bottom in 2021 as well as the pre-Celsius kind of pause that we had in the big crash from Terra Luna into Celsius. There was a pause around 30,000, and that's the resistance that we're coming up on right now. However, if we can break through this, guys, there is not a lot of resistance above us. I talked about this on my Market Pro newsletter that I put out to subscribers on bitcoinandmarkets.com. And, I said, once we get past this, there's not really structure that we can get a good target from. We have to start looking at Fibonacci's. And so I detailed out some Fibonacci levels and where future targets can be probably relatively quickly, because if we are looking back in time to 2019, I mean, this period back in 2019 into 2020, I think it is very similar to today. very similar to today. And so I've also looked on my newsletter, I've looked at comparing that 2019 to today, where we would expect to go. So anyway, take a look at bitcoinmarkets.com and see if you want to sign up for that Market Pro newsletter. All right, back to the Fed statement. The committee seeks to achieve a maximum employment. Blah, blah, blah. We read that. The committee will closely monitor incoming information. That's boilerplate. Let's see. In addition, the committee will continue reducing its holdings of Treasury, so they'll continue QT. In assessing the appropriate stance of monetary policy, the committee will continue to monitor the implications of incoming information and economic outlook. Okay, that's all boilerplate. So that is the FOMC statement. Let me take a look at some headlines here, what we're seeing on the headlines. And I am not seeing anything from news. I can't believe there's no headlines out here. All right, so you're getting the real, like, I guess, scoop here on this if nobody else is putting this information out. I'm going to take a quick gander at this. All right, that's it. So one more quick look at prices, guys. The reaction market, going to go back down to the 5-minute chart. Bitcoin is mixed on the rate hike. Stocks are still slightly here, but like I said, this reaction usually takes a little while to sink in. Let's at the NASDAQ, same thing. Let's take a look at the dollar. Big dip in the dollar, now down to 102, but that is not doing really any damage to the dollar chart, really. We're probably going to bounce here, before we make new lows. Let's take a look at gold. Gold is mixed. And then back to Bitcoin. Looking pretty good. We'll see how this runs. But real short live stream here, guys. Hope that was informational. Hope you got something out of it. If you did, like, subscribe, share, comment down below if you're watching on YouTube. Appreciate all the members over there on bitcoinandmarkets.com and on Telegram, cutting it up every day. You guys can go to t.me/bitcoinandmarkets to join that. And that's going to do it for this live stream. Thanks, guys. Bye.